We are back. You're listening to the Real Side on DTN Live. Always a pleasure to have you with me. And I do appreciate the time that you guys are spending with us on the air, in the chat room, texting, tweeting, and being part of that conversation. 855-REAL-JOE, 855-732-5563. I was able to get hold of David Fischer earlier and talking about the market. The roller coaster ride, let's just get on it, because you need to hear what's going on. You need to know what you're going to do with your money, or what little money you have. What little money I have, I don't know. We'll just put our money together.
Oh, man, are there supposed to be that many? Oh!
And that's what we heard last week on Wall Street all week long. I'm Joe Messina, your host. I'm sorry, David. I couldn't resist, right? I mean, it seemed like it was a roller coaster ride. It seemed like Wall Street was just kind of crazy. Last week, coming into this week, people were, the sky is falling and all that. And I just kept telling people, relax. David will straighten this out on Wednesday. David Fischer joins me, CEO of Landmark Capital, talks in plain, simple English like he does to us every week. And the market, I mean, you've been on for a couple of years. I've not been into, but I've been watching the markets. This is quite different, is it not?
This is different. Thank you for the great intro. I can explain why the market's on a roller coaster, but I can't stop the roller coaster. So, and that's not something you want to get in front of. It'll run you right over.
Yeah.
But yeah, it's been definitely a roller coaster ride. I said it would be this year, and it's nothing short of that. Just today the Dow was down almost 500 points, and now it closed up 200 some points, 231 points. So is that not a roller coaster ride? Yeah, quickly.
All right, but looking at the bigger picture, okay, because I know we all get stuck in these little microcosms. Oh my God, look at today. Oh my God, look at right. But you've taught me, and others have taught me. One day, even 1 week, doesn't make the market. You've been talking about how the market has to balance itself back out. The Fed is unwinding the balance sheet. We've got some trade imbalance going on. I mean, these things are almost somewhat becoming a perfect storm, are they not?
Well, they're interconnected, yes, and we're in a different environment this year than we were last year. I said we would be in this different environment. So, I hate to say this, but, this roller coaster ride, like most roller coasters, stop in a minute or two. This is not going to stop in a month or two. This is going to continue this year and probably throughout the year until some of the things that are abnormal causing this are not in the picture anymore. So, right. I think we could even have, I am reluctantly saying this, I'm a little bit tongue-tied, thinking, should I really say this? Okay, I'm going to say it. We could have a bigger roller coaster ride next year if this roller coaster ride is a significant portion of it is tied to the Fed unwinding or selling their balance sheet. If that's the underlying thing that's causing this, then the roller coaster ride in 2019 is going to be much more severe than 2018. If it's not that, and if it's tariffs, it's Amazon, it's Facebook, you keep going back in time a couple months, it's you fill in the blank, and it's all those other things, then those things, whatever the next new thing is, here. But, we've had some things that have shook in the market, or shook the news, but didn't shake the market last year. So why is it shaking the market this year? I think that there's some things that, as President Trump is saying with China, I think that's part of this, but I don't think that's the biggest picture. I think it does relate to China, but not necessarily what President Trump is saying, but what he's not saying. And I think it has to do with the Fed unwinding the balance sheet. So I think those are the two big topics we're going to be talking about this year, the Fed unwinding the balance sheet and what China is or isn't doing and how we're responding to that as a country. Those topics are not going to stop. And unfortunately, those two topics, along with what's going on with the Treasury, are the topics at hand that has caused uncertainty. And then depending on who says what, it will cause certainty in a market for a moment of time.
They're talking about the Amazon and what's going on with Facebook. I'm sure Facebook isn't help. I mean, there's a lot more going on here, too, in the background. You got the Facebook issue going on. You've got the Amazon issue going on. And even GE is lending to some of the market uncertainties. Aren't they? I mean, all of them?
Well, General Electric is probably the most least transparent company of the three, with the biggest historical breadth in the market, being a main component historically in the Dow. But, it's now being overshadowed, I think, more other, factors like Amazon and Facebook. But, yeah, General Electric has a significant headwind against them. Their stock has totally been obliterated this year, and even a part of last year. So this whole thing with China though does affect GE. So that's part of the connection there, because it affects Boeing, and affects because they're industrial base, GE is, and so anything that's an industrial base is being affected, especially through the tariffs.
Yeah, and then we've talked about the tariffs, but I want to come back real quick. You got about a minute with Amazon. People are saying that the president is this underlying sorcerer. Why is he going after Amazon the way he is? But he talked about going after Amazon on the campaign trail. This is not new, and his biggest beef. And I got to tell you something, because I ship stuff out of our warehouse all the time. What Amazon gets away with getting delivered on a Sunday for $1.47, I can't get delivered during the week for $6. You know what I'm saying?
Well, there's nothing wrong with that, though. That's called capital free markets. There's nothing illegal about that.
Well, no. There's nothing illegal about it. But you know what? We're going to hit this on the other. I'm not going to let you get away with this. And I don't let them get away with it because, look, to me, if you want true capitalism, it has to be an equal playing field. It's just like we build things here in this country that they also build in Mexico, and I hear how it's cheaper to build in Mexico. Well, yeah, they don't have the EPA in Mexico. In California, we have the AQMD. It's 10 times more powerful than the EPA. So if you want a level playing field, if you want to be honest about it, you want to have honest, for lack of a better term, honest capitalism, then the only way you have that is when truly the same rules apply to both sides. The same package that they charge me $4+ for, $5+ to ship on a weekday. If I want it delivered on a Sunday, there's a premium to be paid. But Amazon doesn't have to pay it. Walmart, I mean, they get it. And they say that the Postal Service, right, loses money every year. They're running a deficit. Why should I have to pay for both? I'm Joe Messina, your host. This is The Real Side. Back more with David Fischer after the break. Don't go far. David Fischer joins us, as he does every week, and talk about, not just about gold. He's not just selling gold, okay? We talk about the economy, the direction it's heading in. If you've listened to him for any length of time, you know how he feels about, you got to have real estate, you got to have precious metals, you got to have stocks, you got to have some cash that you want to bury in the backyard. But sincerely, you need to know, I'm so tired of being bombarded with how the sky is falling when really it's not falling. All right, we're going to go back at it. Our buddy David Fischer, CEO of Landmark Capital, great guy. I love having him on. He speaks in plain, simple English, and he deals with the stuff, when you guys send me questions. Last week you were freaking out. I said, you know what, call him. Don't call me, call him. I don't have a clue. I don't deal with the market every day like he does. So if you want to know where the precious metals are in all this, where stocks are in all those bonds, and, where this market is headed, he's the guy to talk to. So, David Fischer's on the line with me, and in the last segment we were talking about, Amazon and Facebook and how the market. And, David, I get your point that, capitalism, the best guy wins kind of thing, but is, the post office already loses money. Let's start off there. We already subsidize them. How is it that Amazon gets away with paying $1.47 to ship a product on a Sunday, and during the week I can use the same size box, if not smaller, and it costs me $6 to have it delivered?
That's a simple answer. Amazon has good management skills. They know how to handle money, and the government has ridiculously lost the concept of how to do either of those. President Trump's probably the first president in a long time from a business standpoint that's trying to bring that back, but the government is stupid. Totally stupid, ignorant, and has no concept how to manage a business, evidenced by them being $21 trillion in debt. they don't handle money very well, and they don't know how to manage people. So this is why, as long as the United States has a U.S. postal system, it will be upside down. That doesn't mean Amazon needs to run and continue in the footsteps of the U.S. Post Office. Amazon is a business for profit, and they hire a lot of people that brings a lot of tax revenue to our country, and they're doing everything by the book. They're doing everything legal. And if you're going to apply the same retaliation to Amazon, and this is where I differ from our president, I support him, but I don't think he's using the same yardstick with Amazon that he's using with all the other internet companies. If so, there'd be a lot of other internet companies in President Trump's tweets saying, it's not just Amazon, it's this company, it's this company, it's this company. But he's not doing that. And the reason he's not is because the owner of Amazon has a huge news publication that President Trump hates, and we all know that. So I don't want to get into the politics side of this, but financially, Amazon has a great business model. There's nothing wrong with it. It's not broke, and they employ 30,000 people, and the government gets a significant amount of revenue and taxes. The day that we have the government come in and, quote, make this a level playing field, and they single out a company, that's not the government acting on the behalf of all companies. That's the government singling out a individual company, and this is where I think President Trump is absolutely wrong. If he had, in my opinion, the fortitude to say all these internet companies and listed a dozen of them, then he's got my A+ on that. But right now I can't even come close to giving that grade because he's singling out a certain internet company, and it's just, to me, it's ridiculous. It's all it's doing, it's causing market gyration.
Well, you think he's using them as an example?
Do I think he's using that as an example? No.
Okay.
No, if he had not made it a public beef where he hates the Washington Post, then I could say, yes, he's using this as an example, and once he knocks that one off the pedestal, he's going to go for another one, another one, another one. But none of that's happening. Okay. He's not using it as an example. He's using it as, I'm not happy with fake news, and this Jeff Bezos, who owns Amazon, also owns a newspaper company that Trump has said multitude of times that is fake news. So if it wasn't connected that way, then I couldn't be, and we all know it's connected. So there's an element maybe that's not being said that the media, and I'm not Democrat, so don't send me hate mail here. I'm pro-growth, pro-capital, pro-Republican, pro-Trump. But that doesn't mean I can't have my own opinion. I don't have to be a yes man and agree with everything he does or says.
Sure. No. I got it. And my people know that. I got on Trump last night for something that he was doing. And my attitude is with this, when he does good things, call him out. When he does bad things, call him out. That's what equality is. That's what that's what we should be doing as conservatives, as Republicans, people that want the rule of law to apply equally across the board. Again, and I know we touched on it, but the Fed and the unwinding of their balance sheet. They're still doing. Well, I shouldn't say obviously. It appears to me like they're still doing that. How long will that go on?
Possibly 3 years, 2 years on the short side of it, unless the Fed sees this market, unless the Fed can draw the conclusion that their actions are causing market turmoil. So far, it's not being presented that way in the news, although there is a correlation, and here's why. When the first Fed this year started to up to the $30 billion a month, last year when they did it, first of all, they did it only $20 billion a month, and there was really not market turmoil at all. There was a few days there, but not much. This year, it's the end of January is when it all started. So, we didn't really have market turmoil all last year until the Fed's upped it another $30 billion. Imagine what's going to happen if this is truly tied to the Fed unwinding the balance sheet. Next quarter, they go to $40 billion, and the fourth quarter, they go to $50 billion, and all of next year, $600 billion. And Jeff Bezos, the second largest trader of bonds in the world, commented upon this on CNBC, saying next year is really going to tell a lot if where this market volatility is. So he thinks that this is being caused by the Fed also. And, he's a lot more wiser about this and market research than I am. But, what I do know is this, is when we look at a trend of when treasuries are sold at the end of a month, and the 15th also, but most of them are unwound by the Fed at the end of the month. When you look at what happened in history, the last day of the month or the first day of the next month, that's when we've had all this volatility for the most part, and they pin it on something else. But it did happen at the end of January and early February. We were down 666 points. The next day, we were down 1,175 points. I'm referring to the Dow. The same thing happened at the end of February, or excuse me, the end of that week. There was a sell-off of the Dow of 1,171 because the volatility didn't go away. The same thing happened at the end of March. Just last Thursday, the Friday market was closed because of Good Friday, but last Thursday the market went down 612 points, and it was down 700 points on Monday. So usually when this happens, we have 2 to 3 days of market downward pressure. Then the market kind of tries to recover. Today is not that. This is not being caused by the Fed, because they already did that, and we're not close to the 15th of the month. We're the 4th of the month, and we're not close to the end of the month. So this is either in the aftermath of that or has no correlation to that, and it has everything to do with tariffs. So who knows? Time will tell. We have to see a few more months, probably 4 or 5 more months, to see if this is the pattern. But there's some indication that the Fed has admitted, first of all, that in unwinding their balance sheet, it will cause market uncertainty and volatility. That's all their models have done before they started this. So now we're seeing firsthand what their model is showing to be true.
I love it. It was like, no, duh, really? I mean, with them, like, we don't know what's going on and what's going down. I find that somewhat amusing. All right, so I can pull this on. I can pull this off. You've been spot on about the predictions, right? Last year and again coming into this year, people always ask me, where do I get my information? How do you compile this? Because you don't just sit down and watch, look at Fox or Bloomberg and that's it, and then you move on. I mean, there's more to it than that. Yes,
I don't have and I have to say this very facetiously, I don't use a Ouija board or crystal ball or any nonsense or any of that demonic things or anything like that.
Yeah. You don't roll the dice?
I don't gamble. I'm not a gambler. I don't do any of that kind of stuff. After you do something for 25 years, things start to, when you start to, first of all, after studying and studying and studying and research and more of that, and you start to see patterns that happen. If this happens, that happens, and if those two things happen, then if this third thing happens, then you know what that picture says? This is probably has a high chance of this happening. So having experience in following this and doing this for a long time aids me in this, but where I gather my information to...
we'll get the rest of this on the other side of the break. I'm Joe Messina, your host. You're listening to Real Side on GCN Live. Back more with David Fischer right after the break. Always a pleasure having you on. And in the last segment, I was just about ready to ask you, and then we ran out of time. Where are the markets headed? Where do you think they'll go, and how much money should I bury? What percentage of my money should I bury in the backyard?
I don't think you should bury anything in the backyard, personally, because now you just told everybody where your money is. So year to date, here's the numbers. The Dow is down. This is first quarter numbers. Dow is down 4.73. S&P is down 3.5%. NASDAQ just slightly down 1/3%. And gold is up 2.8%. Did I expect that? No. I didn't think the markets would be down in equities near as much, although I said it would be uncertain and it wouldn't be close to these increases. Where we are now, first of all, there's no economic, financial crisis going on. I want to make that very clear. This is the market trying to reset, and there's really strong economic growth coming, but the market is ignoring that, and they're focusing on what I call rhetoric from China and the United States. There's a reason for this. I think President Trump really knows the underlying reason, and the reason is because he says we have to do what is best for our national security. What is the biggest asset of our national security? The dollar. What just got launched here recently? The Chinese currency called the yuan. on March 26th. So there's a fight going on that is happening, that will continue to happen. There's lots of things that have been happening with the yuan since it got launched. I'm not saying they're good, but they are competing against the world reserve currency called the U.S. dollar. In my opinion, that's all this tariff stuff is really all about, securing the future of the dollar and America. And so President Trump has to do what he's doing. I don't know if he's going about it the right way or the wrong way, but he's doing what he thinks is best, and I support him in that because I believe in the future of America. If the dollar goes away as far as the worldwide currency, the dollar is not going away as a crash and not being a currency anymore. It just won't be used worldwide. But that's probably going to take a long time, over a decade, I would think. So I'm not an alarmist. Although there are some people I highly respect recently have been writing saying totally opposite of this. And what is happening here recently since they launched their currency, it's moving a lot faster than what everybody thought. So this time frame that I'm saying, if we don't get our financial house in order, it is going to be shortened. Where the markets are going to go, well, it's just going to be dependent on how many tweets, how many pushback China is going to do on this. You know, Larry Kudlow, who's the economic let me back up. Larry Kudlow, who's the U.S. National Economic Council Director, when the markets were down today over 500 points, he said, when he was asked on Fox Business News, are we in a trade war? And he says, absolutely not. Absolutely not. Let me just say right at the top, number one, blame China, not President Trump, because they've been doing this for many years, stealing our stuff. And he goes on and lists all that. He says, but in no way, shape, or form is this a trade war here. What is going on right now is we're in the early steps or stages of the process to see if we will have tariffs. And he commented on the tariffs, and President Trump and China are commenting on tariffs, and ultimately a decision and negotiations will be made. So this is just the talk. That's what's causing this. No tariffs really have been implemented fully yet. It takes time to do that, and it won't happen until the end of May. So we're going to have volatility. We're going to have this year probably a single-digit increase in equity markets, and it's going to be very challenging and very choppy. It's trying to determine market direction, and the computers are causing some of this volatility because when you have a 500-point swing down, the computer kicks in, buying computers that have put buy programs in to buy, kick in and start buying, and then the market goes back up. But when somebody says, like Larry Kudlow, very well-respected man who hates trade wars, says what he says, it's going to influence the market, and it did. It caused it to move 700 points up in a very short amount of time today. So we have a lot of uncertainty, but our leadership is counterbalancing that uncertainty. This is, if you can't handle this roller coaster, park some of your money. In fact, this is a time to probably trim your portfolio. Even if you're sitting long term, it's a wise thing to do. This is happening mostly in U.S. stocks. A great place to put money, if you want to be in stocks, is foreign stocks right now, emerging markets. So there's less volatility, less increase of growth, but you won't have the roller coaster ride. So I'm not saying put all your money there. Just look at your portfolio. Now's the time to get some gold. Now's the time to get secure. That's why people are, going to fixed income. So just be careful, because if this thing goes past a little more correction, then we're going to trigger another big step downward.
Yeah, again, and I'm listening to you speak, and I've been listening to you for, quite some time again. You've got a white paper out titled "Time is Up: Which Bubble Will Burst First to Trigger the Coming Great Deflate," which I prefer deflate to some other things like that. So why don't you tell us what that's about? And while you're at it, what's going to drive gold up? Is precious metals going to stay where they're at? Where are they going to go?
Well, that's an age-old question. There's a lot of resistance on technical side at 1358. We've touched on this 4 times, but usually when the sentiments go sour on any product or any stock, that's when that stock shows everybody is wrong. Everybody thought gold was going to rise, a month ago, 2 months ago, significantly. Last year, the year before, last year went up 12.7%. So that's not bad considering, what is facing in the what stocks have done. So I think we're going to see, gold is in a long-term bull market. And I think next year it's going to really show its head and shine really well, because we're going to have a lot more financial problems next year that will be spurred on by the bond market. But right now it's just kind of moving sideways. A sideways moving stock is not bad. Neither is it bad for gold. It builds stability in the market. But there will be one or two headlines that will cause a breakout in gold. The interesting thing that happened here recently, the last couple of weeks, is gold was the asset that people went to for safety, and so were treasuries. And before, those two were not. And the industry in equities was not betting that was going to happen. In fact, saying quite the opposite. In fact, some people that did options on the market against gold, saying that's not going to happen, they were completely wrong. So gold is going to make a surprise here. It does this periodically, and we are having a lot of bubbles that are being formed. And I do have a white paper on it called "Time Is Up: Which Bubble Will Burst First to Trigger the Coming Great Deflate." In here, it talks about 7 or 8 bubbles that are being formed. They're at different sizes. What's causing them to be formed, and what might cause a pop. Just think back to 2007, Joe. We had one bubble burst, which caused another bubble to burst, and that's when everything came tumbling down. So all we need is, unfortunately, the system is 1 or 2 bubbles burst, and this is going to be a totally different environment. That's why you got to have some metals in your portfolio. That's why you got to have some fixed income in your portfolio. That's why you don't want to have 100% of your money in stocks like technologies or these high-producing stocks that are way over what you call price per earnings ratios. Just be careful. This is an environment of euphoria, and we're paying the aftermath of euphoria. We're not in a bear market yet, but we could be very soon if we see 1 or 2 headlines.
Getting the paper, getting information from you is extremely hard, isn't it?
Yeah, we charge a lot of money for all this information. No, free information, no commitments required. There's nobody's going to bug you.
No hard sell. I mean, I hear that from everybody. No hard sell.
I guarantee you there will be no hard sell. I guarantee you we're not going to make your phone ring off the hook. We're not going to bother you. We're here to help you if you want our help. And I put together a lot of information. A lot of people that have read this white paper have said, wow, I didn't realize how much the Chinese have put this all together. Now I can really see this whole master plan, and it confirms what I've been feeling, and now it makes sense why President Trump is putting on these tariffs. I mean, it totally makes sense. And, I wrote this thing before tariffs were in place, before tariffs were being talked about. And so...
always a pleasure to have David with you, but I can never get him to stop. So, you got to pay attention. You got to listen. Hey, I'm Joe Messina, your host. Always a pleasure. Don't go far. Remember, I told you we got Jerome Corzai joining us in the next hour. We're going to talk about his new book.